Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty end with marginal losses after a range-bound session. Banks and mid-caps also end in the red.
I think people should be prepared for higher oil and gas prices, higher rates, as a matter of just being prepared.
JP Morgan's JamieDimon expects another rate hike from the US Fed, but also cautions against keeping rates higher for longer, identifies geopolitics as the #1 risk facing the global economy. That's an exclusive.
India and America are natural partners. Now you have to be, you're here, so you're between Russia and China, you have to be kind of non-aligned, but we're your best friend.
India and America are natural partners, and the US is India's best friend, says JamieDimon. Adds the optimism about India is justified. The real money gaming industry is staring at a tax bill of over a lakh crore rupees. Dream11 faces the biggest tax demand and moves the Bombay High Court against a show cause notice for not paying 28% GST on the face value of the bets collected.
Market share is not the objective. It is running a good business that is serving customer needs. That's the objective.
Just over a year after taking charge, AirIndia CEO Campbell Wilson upbeat on transformation, even as he admits that the airline has a long way to go, says the first refurbished aircraft will be ready to fly in less than a year. Wilson adds there is no rush to consolidate Vistara and AirIndia brands. That's CNBC-TV18 exclusive. ITC Chairman Sanjeev Puri says the worst of inflation is over, sees green shoots in rural demand, targets expanding FMCG margins by 80 to 100 basis points annually over the next few years. That's another exclusive this evening. The Supreme Court pulls up the union government over the delay in approving and notifying collegium recommendations, notes that approved transfers of 26 High Court judges and appointment of a Chief Justice of a sensitive High Court are pending with the centre. The Apex Court gives the Attorney General 1 week to convey concerns. Oyo is set to report its maiden quarterly profit. Revenue in FY23 up 14%, losses narrowed to under 1,300 crore rupees, reduces the number of hotels on the platform by nearly 30%. Security beefed up in Bengaluru as farmer organizations and pro-Kannada outfits staged protests over the Kaveri water dispute with Tamil Nadu. Schools and colleges are shut for today. Karnataka Chief Minister Siddaramaiah accuses the BJP and opposition parties of politicizing the issue. Thousands of Armenians flee their homes in the disputed region, fearing ethnic cleansing after Azerbaijan's attack. The UN calls on Azerbaijan to safeguard the fleeing Armenians. Envoys from both nations to meet in Brussels. Actor Wahida Rehman will be conferred with the Dada Saheb Phalke Lifetime Achievement Award, the highest recognition in Indian cinema. Rehman, whose illustrious career has spanned over 6 decades, is best known for films like Pyasa, Guide, Kagaz Ke Phool, among others. She's also a recipient of the Padma Bhushan and the Padma Shri Awards. Well, let's start with the market action. It was a quiet day on the Lal Street today. In fact, the markets traded in a range-bound in today's session, ending absolutely flat. So let's take a look at the Sensex and the Nifty on the board for you. The Nifty closing just 10 points lower. The Nifty Auto Index, though, was just about in the green. The Nifty Bank Index down and the Nifty Mid-Cap also closing in the red, but a flattish day as far as our markets were concerned. Not much that was actually moving today. But let's talk about the big newsmaker of the day. JP Morgan's chairman JamieDimon says the optimism around India is completely justified. Those are his words. In a freewheeling conversation on the sidelines of the JP Morgan India Investment Summit, Dimon said that Aadhaar and simplified tax filings are driving optimism in India, or at least some of the factors driving optimism in India. He also said that India and America are natural partners, adding that America should negotiate better trade and investment ties with India. Alluding to the Russia-Ukraine war, Dimon highlighted that the current geopolitical situation was the #1 risk for him. He said, and I quote, "We haven't really seen something like this pretty much since World War II," end of quote. I also asked him about his outlook for the US economy. Dimon said that he expected another rate hike from the Fed. He, however, did caution against keeping rates higher for longer. Take a look. Let's talk about what's happening as far as the U.S. is concerned. And I was having a conversation with Larry Summers over the weekend, and he says, look, he doesn't believe that higher for longer is necessarily going to be anti-growth because it fundamentally underlines the resilience that the economy seems to have. Yeah. But you've been cautioning everybody about don't just focus on today, but worry about tomorrow. So what does tomorrow look like?
Well, I agree with Larry. But he also is quite concerned about it. So if you have higher for longer, but you've got good growth and inflation is kind of contained, that's good. You just have more fighting for capital and people paying up for capital, and the world needs it. It needs it for remilitarization, the green economy, the IRA Act, the CHIPS Act, huge deficit spending, but we need growth. If you actually have stagflation, that's not so good. So I just say, right now it feels good. That fiscal stimulation was extraordinary. The monetary system was extraordinary. That was a global phenomenon, more in the United States and elsewhere. But that's a little bit of a sugar high. And that's a little bit going to go away. And we're hoping we have a soft landing. But all these other things are there. QT, Ukraine, oil, gas this winter, disruption of trade flows. So, I think good leadership on the part of, America, India, China, Europe can make sure the negatives don't happen. But I'm putting myself in the quite cautious category.
You see another rate hike,
I think it's more likely than not, but again, I think people should be prepared for higher oil and gas prices, higher rates, as a matter of just being prepared. You and I can guess what it's going to be. You don't know, I don't know, no one knows, but I think the odds are higher than that, and so, but hopefully we'll get to that. I think the geopolitical situation is the thing that most concerns me, and we don't know the effect of that in the economy. And so but again, I think that the humanitarian part that's far more important. I think that's also very important for the future of the free democratic world. We may be at an inflection point for the free democratic world. That's how seriously I take it.
So geopolitics, the number one risk that you believe the world is facing today?
Absolutely. We've dealt with inflation before, we've dealt with deficits before, we've dealt with recessions before. We haven't really seen something like this pretty much since World War II.
Yeah, so we don't have a playbook for this just yet.
There is no playbook. There's still globalization. The nations are going to have, companies and nations are going to be making determinations which change those flows. That creates huge opportunity, I think huge opportunity for India, for services and certain manufacturing and it creates risks. So I'm hoping that political leaders sit down, have these conversations, and make these changes in a way that's not completely disruptive, but is dwarfed by the risk of war and nuclear proliferation and things like that. So I think we have to be very cautious about it, but it's an opportunity for India, and hopefully you're going to seize it. I also think, by the way, it's affecting global relationships. India and America are natural partners. Now you have to be, you're here, so you're between Russia and China, you have to be kind of non-aligned, but we're your best friend. I mean, anyone who doesn't think that through hasn't thought really carefully.
And you can catch that entire interview with JPMorgan CEO JamieDimon at 7:30 p.m. and 10 p.m. right here on CNBC-TV18. Now, the real money gaming industry is staring at a tax liability of approximately 1 lakh crore rupees. These are estimates as provided by industry. The Director General of GST Intelligence is reportedly sending tax demands to several companies. Show cause notices have been sent to Dream11, and Dream11 has in fact now moved the Bombay High Court. The company has alleged that notices are arbitrary and that it calls for taxing the entire contest entry amount as something that Dream11 is now contesting in the Bombay High Court. Amidst this backdrop, the GST Council will meet on the 7th of October. Shivani standing by with the details. Shivani, take us through what we know at this point in time in terms of the demands that the GST department is raising against gaming companies.
Well, yes, sources have told CNBC-TV18 that the Director General of GST Intelligence has sent a notice to fantasy gaming company Dream11. And on September 25th, Dream11's parent company Spota Technologies Private Limited has filed a writ petition in the Bombay High Court challenging the show cause notice issued against it for the GST evasion, which according to sources is for not paying 28% GST on the face value of bets collected by the online gaming company. Now, sources suggest that the GST notice against Dream11 could be the biggest in the industry so far. Sources also say that many more such notices are on the way, and intimation notices in many cases have gone out to at least 6 more online gaming companies, including Games 24/7. Sources suggest that the industry-wide tax liability could be anywhere above rupees 1 lakh crore. Remember, this comes after the Supreme Court recently stayed the Karnataka High Court's order that went in favor of online gaming company Gamescraft Technologies Private Limited in a similar case. Now, government sources told CNBC-TV18 that the GST law will apply to other gaming companies in the same way as was done in Gamescraft case.
Thanks very much, Shivani, for joining us. We are, of course, waiting for official clarity on what that actual number is, the tax demand number made to Dream11. The Finance Ministry has brought out final rules for angel tax on foreign investments, and this is with the aim to assess whether foreign investments into startups entail a premium that is liable to any levy under the angel tax provisions. The final rules notified also seek to provide clarity to investors and give a set of valuation methods to choose from so that the worth of unlisted shares can be assessed more accurately. Surbhi joins us now with the details. Surbhi, take us through what the fine print says.
Well, there's some good news for startups today with respect to the implementation of the angel tax provisions. Remember, the scope of angel tax was expanded to include foreign investors in Budget 2023. And while several jurisdictions were exempt, a certain category of investors like sovereign funds, pension funds, they were all exempt from the provisions of angel tax. A lot of the investments that come in, private equity investments that come in startups, they were still within the ambit of this, and therefore it was very important to know how the fair value of shares is going to be determined. Those rules are out today, and there are several newer methodologies that have been added to traditional methods like DCF, the discounted cash flow method, or the book value method. Now, what are these newer methodologies that have been added? Comparable company multiple method, the probability weighted expectation return method, the option pricing method, replacement cost method, and the milestone analysis method. So basically, investment bankers now have a wider arsenal of options to choose from when they want to determine the fair market value of a company's shares, which is looking to go ahead and raise funds. Another good thing is that there's a provision now that if a deal is done, if a startup goes and raises capital at a certain value and it wants to do another deal or basically do another round in a window of 90 days before or after the first, then the same valuation can apply. The same FMV can apply as long as the next fundraise in terms of size, in terms of total consideration value, does not exceed the first one. So that brings some more clarity and certainty. Experts say that the move is in the right direction and it should ease out some of the concerns that the startup community had with respect to higher taxation and the angel tax fears that came into play with respect to raising money from foreign investors.
Surbhi, many thanks for joining us. Another exclusive this evening. We've done a good job, but there is a long way to go, and that's the word in from AirIndia CEO Campbell Wilson as the airline completes 1 year of its 5-year transformation plan. Speaking to me, Campbell said the airline is focusing on lowering costs and boosting revenue by flying more passengers, opening more markets and adding more routes. He also asserted that he is confident about the airline's success and profitability. Campbell told me that the airline is on track to achieve the 30% market share in domestic market and international market as well. Take a look.
I think the team has done a good job. As you know, this is a 5-year transformation plan. The first 6 months we really spent focusing on trying to address many of the accumulated issues of the past, and I think we made good progress in that. Now we're right in the midst of deploying the systems and getting the people and the talent and the capabilities that are necessary really to support what will be quite dramatic growth arising from the 470 aircraft that we committed to earlier in the year. So I think so far so good. Clearly we've got a long way to go. We're 18 year or so into a 5-year journey, but it's a good start. If you take 12 months ago to now, we're 26% higher in terms of capacity. 5 new international destinations, a number of new domestic routes. And we should be increasing by more than that in the next 12 months. So when you consider this, this is compounding capacity, it's a very, very steep acceleration. In addition to the ingestion of aircraft, obviously we expand the network, expand the reach, expand the connectivity, expand the frequency. So I think people are going to see not just a continuation of the progress that we've made in the last 12 months, they'll see an acceleration. Now clearly there's a lot more we need to do. I just want to be very clear that we don't consider ourselves anywhere close to the finished product yet, but there is progress happening. We're putting together an airline that we hope carries the hopes and aspirations of India, the new AirIndia, to some of the most exciting destinations in the world. We're going to be offering one of the fastest paths in the industry, the global industry, from induction to command, from narrow body to wide body. If you're an aviation professional, where else would you want to work? And so we're very fortunate that we do have a lot of people wanting to work for Air India. In the past 6 months or so that our team have been working on recruiting pilots, we've recruited more than 650. And so we're a little bit blessed. The $400 million largely goes for seats and for in-flight entertainment, although there's some physical work that needs to be done in the hangar. The money has been committed, but it's being progressively spent as the various seats and in-flight entertainment systems are constructed. When you're fitting out more than 40 aircraft, there's a lot of seats and a lot of in-flight entertainment systems that need to be manufactured. That is going on as we speak. It's why the process takes time, but hopefully July, August of next year, we'll see the first aircraft go into their hangar. We think Vistara is a great airline. It's obviously beloved by customers as well. It will continue to operate as Vistara, continue to operate in the way it operates until such time that we feel we've brought Air India up to the level that might allow us to consider a consolidation. But there's no timeline to that. There's certainly no rush to do it. We want to learn what we can from each other and ultimately make the future Air India be better than the sum of the parts.
And you can catch the entire interview with Campbell Wilson, CEO of Air India, at 5:30 and 9:30 p.m. right here on CNBC-TV18. Well, from one aviation executive to another, IndiGo CEO Peter Elbers expects demand to remain strong this festive season. Speaking with Danish Anand, Elbers said some aircraft have been grounded because of the Pratt & Whitney engine issue, but stopped short of giving a specific number. Elbers also said contingency measures are in place to tackle the capacity constraints. Take a look.
So what is the effect of the Pratt & Whitney engine issues? How many aircraft are grounded because of that, and how many engines are affected? And in what sort of talks are you in with Pratt & Whitney to solve this issue as soon as possible?
Well, this issue is there since last year. I'm 1 year in India now, and basically the issue is there. We are in constant talks with Pratt. But in fact, what we do really is we're doing two things. We continue to talk with Pratt on, okay, how can we get more supply chain? How can we get more engines? How can we get... So that talk is, I would say, it's intense and it's consistent. On the other hand side, we've taken a whole range of mitigating measures in order to make sure that we have that capacity. So we have a set of planes grounded now. No airline wants to have planes grounded. But what's important for us is that against that backdrop of Pratt, we have been able still to deliver our capacity guidance. You know, our capacity guidance for the full year 23, we delivered. Our capacity guidance for the first quarter, we delivered. Last year, we welcomed 86 million customers, which was a 15-ish% higher than the levels we had prior to COVID. This year, we expect in the range of 100 million customers, and we're confident that we can make that 100 million customers. So we continue to build on that track, and we continue to look for alternatives and mitigating measures to make sure that we can live up to the demand.
That's Peter Elbers of IndiGo. Up next, the Supreme Court pulls up the union government over the delay in approving and notifying collegium recommendations. That and more when we return. Well, hospitality chain Oyo is set to report its first ever profit after tax of over 16 crore rupees in the second quarter. This as per an email sent by the company's founder and CEO Ritesh Agarwal to the company's top management. In the email accessed by CNBC-TV18, Agarwal says the revenue from operations for the fiscal grew 14% year-on-year. Oyo has also reduced the number of hotels on its platform by nearly 30%, and that's possibly also led to the jump that we are seeing as far as its profitability or move to profitability, as well as its cutting down on losses is concerned. JSW Infrastructure's public offering has been fully subscribed on day 2. The retail quota was booked more than 4 times, and this portion is 10% of the total offer size. Qualified institutional buyers were subscribed a little less than 1 time of the portion reserved, which is 75% of the 2,800 crore rupee issue. The Director General of Foreign Trade has said that there is no import restriction on the quantity of laptops, tablets and PCs for importers that register on its portal. Sources have said the DGFT wants the importers to declare the quantum and the value of goods to be imported on its portal. The government's foreign trade body has assured that this move aims only to determine the country of origin. Now, security has been beefed up in Bengaluru as farmer organizations and pro-Kannada outfits stage a protest over the Kaveri water dispute with Tamil Nadu. Schools and colleges are shut for the day. Karnataka's chief minister has accused BJP and opposition parties of politicizing the issue. The Kaveri Water Regulation Committee has directed the state government to release 3,000 cubic meters per second of water daily to Tamil Nadu for the next 15 days. The Supreme Court has pulled up the government for delaying the approval process of the Collegium's recommendations. The court has observed that the Collegium had approved the transfer of 26 High Court judges. However, the process is still pending with the centre. Ashmit joins us now on Court Corner with more details. Ashmit, we're back on this issue again.
Well, indeed, this issue is not dying down. In fact, that is one of the issues that Justice Kaul, who's heading this bench, had conveyed to no less than the Attorney General. The Attorney General saying that, look, I need a week's time. I will convey these concerns. The concerns of the Supreme Court, we've heard it before, and it was reiterated once again, and this time substantiated with numbers. Justice Kaul said that he's not handicapped with the loss of numbers anymore. And towards that end, he pointed out that, look, as many as 26 High Court judges, which have been recommended by the Collegium, the centre is just simply sitting on it, not approving those names. In fact, the Supreme Court also pointed out that there's one particular sensitive High Court which is operating without a Chief Justice, and that is also because the centre has not approved the recommendation for a Chief Justice of that very same sensitive High Court. So to that end, 1 week has been granted to the Attorney General to convey these concerns to the centre. But importantly, Justice Kaul observing that they are being quiet today. They are reserving their comments today as far as the conduct of the centre is concerned, out of courtesy for the Attorney General, and that if there is no rational, actionable response by the next hearing, the Supreme Court said it will not be quiet anymore. So again, a word of warning there coming in, not just for the Attorney General, but also for the centre to get cracking on these recommendations of the Collegium.
All right, Ashmit, appreciate you joining us. That is the latest on the issue of the Supreme Court pulling up the central government on the Collegium recommendations. And with that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Do stay tuned. The news continues here right after this short break.